All right, we're live finally. Hello, Facebook. It's 8 o'clock and time to have that discussion I really wanted to have with you guys. As I mentioned, I really wanted to go ahead and talk about what's going on in the lending space. See a lot of Facebook posts going on from lenders, loan officers, realtors, just all over the place. And there's certain things that I think are inaccurate, and I think I know are inaccurate, I should say. So we're gonna give this a little bit of time, see if a couple people join. If you have anything, feel free to type away, ask questions, communicate back with me so I can answer everything. I'm really excited to, like I said, address this topic with everyone because, I think we should all be informed, and hopefully, what this will do, it's going to help you save a couple deals in the long run, or if you're a client, maybe it helps you stay in the house. Had a couple scenarios actually take away with clients coming in, calling me that I was able to give them some valid information on going with that. So I'm bringing this up right now. Perfect. Let's get in here, guys. All right, so let's get talking. Got a couple people on here. So again, what I wanted to address, as I mentioned, is what's going on in the FHA space. There's a lot of, I'd say, rumor mills. Lenders are out there posting, loan officers are out there posting, realtors are out there posting, title agents are out there posting again, saying that FHA has mandated that the lowest credit score we can take, it's a 620. You got people saying it's a 640. You have other people saying it's a 680. Really kind of puts us all over the board. There isn't one consistent message coming to the consumer, to our clients, to our family members who were interested in applying or looking at being homeowners here in the near future. So I think that's really a disservice to our community, because our community then doesn't know, should I apply, should I not apply? And that's a big deal, because really we all need to have the confidence, and that's really what holds a lot of people back, is the confidence of the unknown. They don't know what's going on, and so when everyone's pitching in what's going on, saying that this is what it is, and some of us are not even in the industry, saying lenders said this, so and so said that, again, it's going to create a lot of uncertainty. And as we all know, with uncertainty, well, we have plenty of that right now with what's going on in our environment with COVID-19, the coronavirus. So we don't need to create any more uncertainty than we already have. If anything, we need to build consumer awareness. We need to teach. We need to educate, so we can build the confidence of our family members, of our friends, of everyone again, so we can get back to it at what we do best. So here's the reality of it, guys. Let me just get to it. FHA has not changed a single rule and a single thing. Okay? FHA did not change any credit score guidelines. FHA didn't go ahead and say, oh, you guys can't take a credit score below this. As far as today goes, okay, April 2nd, 2020, FHA is still willing to take a credit score, technically speaking, all the way down to 500. Now, anything below a 580 does require 10% or higher down payment. But they haven't said no. They haven't changed anything. Nothing's come out from them to absolutely telling all lenders across the board to change anything. So then that creates a lot of questions. Well, why is everyone saying it's 620? Why is everyone saying it's 640 or 680? Well, guys, that isn't from FHA. That is a particular decision from the lender or the bank, that they've decided that they're going to go ahead and put what we use the term overlay, meaning that they're going to add an additional rule above and beyond what FHA mandates. And they'll do this here and there, and particularly now with what's going on with the economy, to protect themselves. They don't want to take that risk right now. And quite frankly, with a lot of people going unemployed and a lot of people about to go ahead and basically skip who 2, 3, 4 months of payments, it does make a scary environment for them to be lending at a lower score. And not because someone at a lower score is a bad person or anything like that, but simply what a credit score is supposed to design to tell us. It's called ability to repay. So basically, the higher your credit score, the more likely you are to go ahead and repay, and the lower your credit score, the less likely you are to either even repay or pay on time. That's all it's simply designed for. And so a credit score isn't going to tell us yes or no, you qualify. And a credit score isn't going to tell us, again, what is really going on there. But in today's environment, lenders do put restrictions. You got lenders up there basically changing a lot of things. What's up, Mohit, Yulia? Ooh, I see you guys joining. Appreciate it. Appreciate the support, guys. But they're not going to do any of that. Okay. The other thing that I see out there that they're talking about is that there's debt to income restrictions. Well, again, that's not from FHA. Make it very, very clear to everyone that you guys are aware of this, because as some of you know, I started my own adventure during all this craziness by opening up my own broker shop as a mortgage representative. And during this, one of the great things I've been able to do is continue to educate myself. And by doing so, I've been able to talk to certain banks, certain lenders that we'll be able to partner up with. But not just for me, for you guys, for clients, for partners that haven't made a single change to their rules or policies. There are lenders still lending all the way down to a 580. So if you have a deal that's falling apart, or if you as a client are under contract and all of a sudden your lender or your bank is not allowing you to continue because they've made changes, pick up the phone and get a second opinion, get a third opinion. Reach out to me, reach out to your realtor, and have your realtor reach out to their partners. But we shouldn't be losing deals if it's simply because they changed their guidelines. There are things that are unavoidable. There are people being laid off. There is furlough, and all that's happening. Like, we can't do anything about that. Simply enough, if you're not receiving income, even if you're clear to close and the deal hasn't funded, it's not closing, guys. They're gonna find out. They are making phone calls the day of funding to verify everyone's still employed, because they understand that things are changing day to day, minute to minute. So that's not going away. That is a additional tactic that is necessary because they want to make sure that the investors are going to buy the loan after the fact. So it is necessary, and there is good behind it, because at the end of the day, yes, it would be great if your client closed. But if you think about it, you as a consumer, you don't want to close on the house if you can't afford it. All of a sudden, you're already in a bad spot. And we don't know where that's going to take us. We don't know how long that's going to take to get back to normal. So another thing I wanted to address on the whole credit score thing, that again, everyone's out there talking about it. As we know, at least the ones in this industry, is when we pull credit from the lender side, okay, or from the broker side or from the bank side, specifically for a mortgage, the credit score is always different. And the credit score is always different than it's going to be from Credit Karma. And the credit score is definitely different always than it's going to be from, let's say, any of those apps that they're getting, that the consumer's getting for free. You as a client, you're out there looking at your phone apps or looking at, any free app that you get from your bank that gives you a credit score. It's time to start learning what credit score you're looking at. So yes, there are 3 credit bureaus. We all know Equifax, Experian, and TransUnion. That's great. But did you know that there actually is 28 different versions and models when we add them all up? And they actually got new ones coming out. You're like, what? Versions or models? When you're on your app, if you guys are on your phone right now, or you have your phone near you and you got Credit Karma or you got one of these apps, go ahead and log in and go ahead and go look right where it says the credit score. And that somewhere around there, next to where it tells you it's Equifax, somewhere near there, typically in little fine print, it'll say model or the word version, and then it'll say 8.0, 7.0. Same with Credit Karma. It'll actually, and more importantly, with Credit Karma, it calls it a Vantage score. It doesn't even call it a FICO score. And that's a whole nother conversation on why they do that, and it's part of their marketing that I'm not going to get into. But simply with the different versions or the models made, is that it's a different algorithm that's weighing your late payments or your payments on time, weighing your credit cards, weighing your car loans. It's weighing everything differently. And due to the different algorithm, it actually gives you a different score. So what I mean by that, it's on any given day, at any given time, every one of us, unless we're kids and we don't have credit, but every one of us actually has over 28 different scores at the same time. Literally, we all can go in and pull our credit, and depending on what we're applying for, I could literally walk into a car dealership today, at the same time call a credit card company, and same time apply for a home loan and have them pull my credit at the exact same time, and I would get 3 different scores, not because there was a credit inquiry, but simply because it was different to begin with. It was different before they even pulled it. So knowledge is key. Building confidence amongst each other is important. So please don't let that, again, the credit score minimum has changed, deter you from still being a homeowner right now, or scare you that all of a sudden they're gonna not qualify you. And again, for you agents that have deals that were falling apart because that particular lender isn't taking that score anymore, do some research. There are plenty of banks and lenders out there still loaning and not making any changes to any other guidelines, not any changes to FHA, not any changes to VA, USDA, or conventional. So really, hopefully I harped on that enough, because I think that is key that we all are aware of that. What's up, Juan? Hope you're doing good, man. Haven't talked to you in a while, Falcon. But it's just something that's been bothering me, because I think what it does, it's going to, stop people from applying, and stop the economy from moving. And all of a sudden, someone that should have been a homeowner or could have been a homeowner, because they've got bad information, they get scared and they don't apply. That's not the right thing to do. So if you as a loan officer can't offer a certain program, you shouldn't stop that from allowing those other clients to apply. You shouldn't stop that from creating business for other people. And you as a consumer, only because someone tells you no, get a second or third opinion. It's no different than the doctors. Sometimes we don't like what the doctor says. Sometimes we don't like that they recommended us all these pills, and there might be a different method to cure something. So you want a second opinion. And maybe there's not. Maybe there isn't a solution, but at least you heard it from someone else, just not one representative. I know when someone's talking to me, I always welcome them. Hey, go shop around, go get a second opinion, because I'm confident with what I'm doing. So I think we should all encourage that, because it is key to having success amongst each other, and again, creating that confidence there. The other thing I really wanted to address again was going to be, now that we, I think, got across, again, there is no FHA guidelines changing on credit score. Well, there are lenders out there also putting restrictions on debt to income. They're, again, trying to lower their risk factors. Very common, very known that lenders who do that. Give me a second here, guys. Gotta get my Red Bull. But since it's very common and very well known, it is important that we're all understanding that, again, this is a lender thing. This isn't a bank thing. This isn't an FHA thing. So FHA, debt to income, hasn't changed anything. Have they gone ahead and talked about this stimulus package? Let's talk about some of that stuff. Yeah, FHA did come out with a couple bulletins, a couple guidelines that are really important for everyone. So we'll go and talk about what I talked about the other day, this forbearance package. So with the forbearance package, what it's doing is, traditionally for a consumer to apply for forbearance, they have to go ahead and be able to show proof up front that they're going through a hardship, whether they were laid off, whether they're, got injured and they can't make their payments, but they have to show proof up front that they're going through a hardship to qualify for the keyword being forbearance. What the stimulus package has done is expedited that process, that all the consumer has to do is attest on a phone call. I believe Bank of America is actually doing it online, and quite a few lenders are letting you go online and attest that basically you're going through financial struggle without no proof of paperwork, no nothing. So what the stimulus package has done is, for all these people that are getting laid off, it's allowed them to go ahead and process that a lot quicker so they don't fall behind. They're not negotiating and going back and forth with the banks or lenders. So that's really key for them because, well, it does speed that up. However, what that's doing on the other side is, well, you're always going to get people who take advantage of that. So you got people who are perfectly employed, make plenty of money, who are attesting to this. So that's one issue in itself. The biggest issue, though, behind the keyword forbearance is that it's not the word deferment. It's not the word forgiveness. So what forbearance means is that it puts the payment on hold, and more importantly, the actual payment it's putting on hold, it's principal and interest. It's not putting on hold your taxes and your homeowner's insurance. It's principal and interest. And why principal and interest? Well, technically speaking, principal and interest is the revenue from the bank or the lender. The stimulus package didn't stop us from paying our insurance, our homeowner's insurance. So you got to keep paying that escrow. And it didn't stop us from paying our property taxes. The government still wants their take. So guess what? It's still making payments on that during that time. Most importantly, at the end, so let's say you qualify for forbearance, and let's say your principal and interest was only $1,000 a month. Your total payment was $1,500 a month. Well, that means that technically you should be making $500 a month because they forgave you for 3 months. So you're saving yourself the $1,000, right? You make those $500. Month number 4 comes around, you're back to $1,500, you would think, right? Well, not the case. Actually, what you're due is you're due those 3 principal and interest payments that you were supposed to pay at the very beginning. So now, again, $3,000 plus $4,000 plus the taxes and insurance, you're at $4,500. So on month number 4, you owe $4,500. Well, the reason you went and applied is because you weren't receiving income or because you were hurting or because you needed help, not because you just couldn't make the payment. And this is an issue. So FHA went ahead and posted out guidelines saying that if you were not delinquent, if you were not late in March, and again, you apply for forbearance during these 3 months or however long the forbearance is granted for, lenders are not to report delinquencies or late payments during this forbearance time, which is very good. However, it doesn't address what happens when the forbearance time is over and you don't have the funds to make that one lump sum payment. And it sounds so obvious that this should have been addressed. And it sounds so like common sense that this should have been addressed, but it has not till this day been properly addressed by anyone. And this is the part I'm trying to make sure we all share with our family members and our friends or everything. Because what's going to happen on month number 4 is if you don't have those funds, you're going to have to pick up the phone, call the bank, call your lender, and basically now actually negotiate or deal with or somehow hope that they do the right thing. And I'm not saying they're not going to do the right thing, and they might do the right thing on 90% of people. But if they don't, you're on the hook, and it's going to damage your credit. It's going to make you fall behind. Or if you can't even get caught back up, and they don't want to work with you, you might go into a foreclosure situation, which is even worse than when all this started. Now, the idea is that when month 4 happens, again, they do the right thing. They're going to grab the first plan, just so everyone understands, the first course of action is that they would grab basically that 3 months worth of payments, and they'll maybe divide that out over the next 5-6 months so they pick it up quickly. That is the first course of action if you're not able to. The second course of action is that they do a deferment plan. But one of the things I want to address about this deferment plan is that, yes, it puts the payment at the very end. So that's great if we're looking at it from the eyes as a consumer, as us, right? But if we look at it the side from investors, from lenders, from the people that actually have to grant this, it is not such a great bet for them to give us deferment. It's actually very bad. Imagine if, again, we have, right, well, they're talking about what, unemployment hitting 30+%. So let's say minimally we have 25% of people go ahead and apply for deferment. That means 25% of those mortgages have now, they're not received, they didn't get those payments during those 3 months. They pushed them out till the very end, 30 years from now, 20 years from now. Supposedly it's when they're going to see that money, which we know they're not. It's a bad financial business decision because at the end of the day, as a lender or a bank or whoever they were that did this, they still had to go ahead and make their payments to their investors. So it is not in the best interest for them. And I say this because I want everyone to truly understand why I don't see this after 3 months, 6 months, 90 days, basically coming out on the best side for clients. I just don't. I do see this being an opportunity for those people that need the help. I think they should apply for forbearance. Absolutely. If you need it, do it. It's still helpful because it allows you to, well, survive and live. And hopefully at the end they do the right thing. It's still better than not doing it at all. But for the ones that can pay, really need to. So I hope that gives you guys a great understanding why it's what the stimulus package is designed to do, what currently it hosts, what it does and doesn't do, and what it does and doesn't guarantee. And again, the main thing it's doing when it comes to the forbearance is that it's making lenders not question, just take verbal or written attestations right away without requiring documentations up front. And that's another thing. That's up front. That doesn't mean that they're not asking, they can't ask for it later down the road, which is another concern. So let's say you applied for this, and you really didn't have a hardship, and then basically now they're like, okay, now show us down the road so we can go ahead and work with you for the, let's say, deferment, this or that, and you spend all your money and you don't even have proof. I don't see them working with you. I mean, it's just the reality of it. So understanding what you're agreeing to, understanding what this package means is really, really important. I also had another question from a buddy here. So let me go through here because I had a couple people send me a couple questions and I want to make sure I don't miss anything. But hopefully that gave you guys a great explanation on what's going on there, what that takes care of. Let's see here. Hope everyone, like I said, staying safe. I think today was like the first full day of full-on lockdown. You know, luckily we can go outside and exercise. I've never seen so many humans walking outside in the neighborhood. That is a little weird. So that definitely keeps it fun. Here we go. What has the president really said about helping homeowners and the difference on what your bank? Yeah, so again, back on this, what they plan on doing during this time, it hasn't been addressed. I had one of my old co-workers from many, many moons ago at the Honda dealership I used to work at get involved. He asked me again, what's going to happen with these payments? Like I mentioned, unfortunately, it's not addressed, man. It is what it is. Again, as far as FHA, they did step up and tell lenders, hey, don't report late on the credit report. So if you do need to apply for forbearance, please note that that's going to work. Also know this, though, if you were planning on doing a refinance this year, or if you're in the middle of doing a refinance, or you plan on taking advantage of these rates that are, I mean, still extremely low, all-time low. I mean, no, they're not technically what some of the people say they were, like at the very, very beginning of March. But compared to 2018, even compared to most of 2019, the rates are lower than we've seen them in a very, very long time. So it is still a great time to take advantage of that. The market values, the home values are still up. So a lot of people have a lot of equity in their homes. So instead of maybe doing a forbearance package, maybe you should look at refinancing. Most of the time when you refinance, You can use that equity to pay your closing costs, which will be minimal. Most of the time when you refinance, it's going to at least skip 1 month worth of payments. So you can literally a lot of times refinance for either nothing out of pocket or just your appraisal of $500. And like I said, I mean, don't take it from me. Feel free to call whoever helped you last time, because this video, this message here isn't about me. It's about the community. It's about getting this out there. And I really want to make that clear, that there are a lot of better solutions to trying to figure out how to make this affordable. But get a second opinion before you just sign on the dotted line or pick up the phone and agree on something. I know there's quite a few clients that we're already helping with on refinancing because it's just going to make sense. And quite frankly, that locks them in at that lower rate, lower payment. So talking about the reason why the forbearance package will affect people if they wanted to refinance this year or next year. That's super, super important, okay? The reason why is, traditionally speaking, as of today, the guidelines read that if you want to take advantage of a refinance, we have to document minimally that the last 12 mortgage payments on the current home you're trying to refinance at least have been on time. So with a forbearance package, there is no mortgage payment. So you even skipping 1, skipping 2, skipping 3 payments, even though it doesn't report late, it also reports you didn't make one. It is contradictory. It is a silly, silly rule, but it is important to understand that, silly as it might sound, just like the forbearance terms, it can affect every single one of you. So please note that, okay? Just note that it can, if you're looking at doing that, before you agree to it, pick up the phone, talk to your original loan officer. I do believe in going back to the person that helped you the first time, because it's easier a lot of times because they already know your scenario, they know your file. So reach back out to them. If you want a second opinion, happy to give second opinions at no cost. Don't even have to pull credit, but just so you know where you really stand and what your options really are. So I know that's kind of being a little repetitive on some things, but I do want to drill this message all the way in as far as what's going on, as far as any of this. So I hope that helps you guys. Really appreciate a lot of you joining. I hope you guys can pass this video on to your family members, to your friends, anyone that's considering any of the stuff going on or was, has a deal falling apart. Talking about that, I did mention I had a story today. Yeah, I had a story today where a person reached out to me. The person they were working with, it fell apart. Okay, the deal's falling apart. They told me what type of deal they're doing. I already know someone else that's doing it. And simply enough, I said, look, they have your deal. Call them back. Ask them if they can work with so-and-so. Turns out they can. So they don't even have to start all over. The other individual just didn't know that the other particular lender or bank hadn't stopped offering that type of program with any restrictions. So let's help each other share information. Like I mentioned earlier and last week, I'm going to keep bringing videos to you guys with just information and knowledge. And I just only hope you guys share them, because I want to make sure that I can do something this time around. What I mean by that is, I at one point I shared, hey, in 2007, 2008, when the economy fell back then, I just graduated high school. I didn't know anything. As I tell my son, I knew nadas. Absolutely nada. It's about the economy, about the real world. And if I can just make a difference in one person's life and help them keep their house, help them do something, make a decision that made a difference, that's all I want to do. And I hope you guys feel the same way. And that's the message I want to get across with everyone. So again, more information to come. I'm sure more things are going to be changing. Things did change with appraisals. I'll be addressing more about later on this week. So stay tuned, and I'll make sure you put a message out before I go live. And again, guys, if you want me to share certain things or you have questions, my number, you guys have it, or send me a message. If you don't have it, you can message me at 407-902-2262 right through WhatsApp, or right through that number directly. Just whatever's easier for you guys. I really do appreciate it. You guys have a good one.